Afternoon, Glenn.
Good afternoon, Graham.
Yeah. I just kind of wanted to have a little bit of a chat with you. You know, just I know we were talking the other day, and we were talking about how mortgages rates are pretty good at this moment in time, and how, you know, potentially I think people are missing a trick. You know, the cost of living is extremely high at this moment in time, and I think one of the things that's perhaps not followed suit, even though properties have gone up and everything else, is mortgages seem to be pretty competitive at this moment in time.
Yeah, very competitive. So if you're looking to remortgage, some good deals out there, depending on the amount of equity you've got in the house. But it's definitely worth having a look at something. If you're on the variable rate, you could be saving yourself a lot of money. And most lenders will pay for the legal work, pay for the valuation. You know, if you want to take money out now to do the house up, now's the time to be having a look at that. So yeah, definitely worth having a look at. You know.
So it's actually a case of you wouldn't have any expenses if you wanted to swap your mortgage?
No, lenders will cover everything. So they'll pay for the legal side, they'll pay for the valuation side. So it's a good time to speak to a broker, get them to shop around and see what the best deals out there. It could be that you're already with the best lender and you just need to move it on to a different rate, or you could be getting a better rate with another lender. I mean, you're looking at rates maybe as low as 1.5, 1.6 if you've got a lot of equity in the house, and a lot of lenders' rates, variable rates, probably 4%, so there could be a big saving.
So if somebody's already in their current home and they've got a mortgage as it stands at this moment in time,
yeah,
and maybe they started with a 15, 20 or 25% deposit on their property,
yeah,
and their property's gone up in value,
yeah,
would that mean then that they can get perhaps a lower rate because they've got more equity in their house?
absolutely. So if you started off and you bought £100,000 house, you put down 15% deposit, so 15,000. The house has now gone up to, you'd know better than me, but let's say it's gone up to 150,000. You've paid some of the mortgage off, then you've got a lot of equity in there, so the loan to value is lower, so you're going to get a better deal. So, and like I say, whether that be with your current lender or whether it be moving it to a different lender.
Right. So in terms of what you do for them from our business point of view, I know that you do a lot of work in terms of getting new clients coming to us that are moving and changing their mortgages to buy a new house. In reality, what you're saying is really that they can actually change their mortgage on their current property and save themselves quite a few pounds.
Yeah, I mean, for clients who are clients of ours, that's something we do when their deal comes to an end. We review it, we speak to them, and we look at seeing what they want to do. Do they want to reduce the term, get a better deal, take some money out for home improvements? But we also do that for everybody as well. So if somebody wants to just just have a look at it, it's all a free service. We will have a look at it and tell you whether you could save money or not. You might not be able to, maybe you've already got the best deal, but for 20 minutes it's worth having a chat and seeing what we can do.
So in terms of your costs then,
yep,
to a client, they can have a chat with you completely free of charge?
Absolutely free of charge, yeah.
Right, okay. So that sounds like a pretty good deal
to
start with, and if it's no good, it's no good.
It's no good. It's 20 minutes on the phone. If they've got the best deal, we'll tell them they've got the best deal. Yeah.
So do you just use a particular lender then, or?
No, we have a panel of lenders, so there's probably 50 lenders on our panel, but all the big ones, HSBC, Nationwide, NatWest, Halifax, and then a lot that people won't have heard of that only deal through brokers. Maybe owned by big institutions, but you wouldn't have access to them yourself because they only deal through brokers.
And are they usually the more competitive ones? Or?
All lenders go in cycles, you know. It's like anything. If you want the business and you're not getting it, they'll put out cheaper rates. But yeah, they often can be because they haven't got the high street presence, so they can offer the better deals straight to the clients.
Right, so you have something that you can check all them on? And
yeah, I mean, like I say, if you came to me now and we took all your details, you told me what you were looking for, we have a sourcing system, and we'd have a look at it and take it from there and say, well, this is from what you're telling me you want, Graham, that's the best deal, or actually, Graham, you've got the best deal already. So yeah, and that's all for it.
And there's no obligation with that.
Absolutely
so
no obligation if you
go away
decide
and do it.
Yeah, exactly.
Just carry on at that rate. So that all seems like really good news in terms of people saving a few pounds. Another thing that's actually kind of somebody was talking to me about the other day, and it was somebody that had just gone through a first-time buyer process, and the reality behind what they were saying to us, they didn't really understand the process of how to apply for a mortgage. They always thought, do we just go to our bank and, you know, we bank with and talk to them and just follow their process?
Yeah.
We know, working in the industry, that there's a lot more to it than that. You know, people have to shall we say, have certain amounts deposits and things like that to be able to get a mortgage. Do you just want to talk us through what would be?
Yeah, so when the process starts, then you can go and see your bank, but you're probably better off going to see a broker because they'll shop around. So rather than you having to go around all the banks, a broker would shop around, and all lenders have different criteria and offer different things. So some might want a 10% deposit and some want a 5% deposit, which that's a big difference. You're buying a £100,000 house, 5% deposit, 5,000. Still not easy to save up, but a lot easier than a 10% deposit, which is £10,000. So all lenders have different criteria. They all have different rates. Some of them are going to give you free service if you're a first-time buyer. Some of them will give you cash back towards your solicitors. But yeah, the first thing to do before starting to look at a house, whether you go see your bank or a broker, go and see them, find out what you can afford, find out what you can borrow. Ideally, get an agreement in principle. So that's where we'd get a mortgage agreed with a lender.
Yeah, so what do they really need to do then is get in early, start the process with that before they even start looking at properties.
Yeah, I mean,
and everything else on that side.
Definitely. I mean, a lot of estate agents now, because of COVID and the shortage of supply of properties, want to know that you've got those funds before they will let you go around and view a house.
I suppose with COVID and everything else, that's another sensible option, isn't it?
Yeah.
In truth.
Yeah, and from a financial point of view, it puts you in a really strong position when you're putting an offer in, because if you've already got that mortgage in place and you're a first-time buyer with no chain, you can with confidence put that offer forward going, well, I know the lender's going to lend me that money, so I'm in a really good position. It's all going to be down to valuation and a bit of checking of paperwork, so it does put you in a really good
makes
position.
sense, really,
Yeah,
doesn't it?
absolutely.
In terms of doing it that way. So, if a typical, I mean, we're in Brig as it stands at this moment in time. Typical starter house in Brig's probably £140,000–150,000.
Yep.
So, if we're talking about a 10% deposit on that, we're talking 14–15,000 £.
Yeah.
So, if they can get a 5% deposit instead, they're talking £7,500,
Yeah.
which can make the difference between getting in there.
Yeah.
I know another thing that's kind of come up is gifted deposits, where parents have paid the deposit for them. And I know that some lenders, well, I'm saying I know that some lenders, I know that there can be difficulties around that. Is there different lenders, or is it just a different process?
It's down to lenders and having criteria. Most of them now will start looking at a gifted deposit if it's coming from family. Some will look at it if it's coming from friends, but it usually has to be from family. It usually has to be a gift, so non-repayable, and they require that the people gifting it don't have a claim on the house. So it would have to be a gift that was given to children.
Yeah,
or other kind of
so for
relations.
instance, I've got children, one's at uni now and one's more grown up, but if we wanted to gift them the money towards a deposit, that's kind of acceptable.
That's acceptable. Probably the lender would just want a letter from you, probably want to see where the money had come from because of money laundering rules, but basically as long as you're signing to say it's a gift, it's not going to be repaid and you'll have no claim on the property and you're not going to live there, most lenders would be happy with that. So yeah, if parents and grandparents and family can gift money, then yeah, it certainly would help.
So then in terms of the process, what would somebody need as a first time buyer if let's say somebody called up tomorrow and said, can I speak to Glenn? You know, and they were first time buyers, what would you need from them? What sort of criteria would you need to start looking for them a mortgage?
So to start looking for a mortgage, we'd need to know what deposit they've got, so we know which lenders to look at. Once we know what deposit we've got, we then need to know what their income is, what their commitments are. So by commitments, we don't mean phone bills or car insurance. It's literally things you can't get out of. So I know you can't get out of car insurance, but it's more like personal loans, car lease, credit cards, store cards, that sort of thing. So the lender will look at affordability, so they'll take your income into account, so your basic salary plus any overtime bonuses, etc. Or if you're self-employed, they want to see your last 2 years accounts, and then they would look and take any commitments off that, and also if you've got children, that will come into it. So it's not, they all have a different way of calculating it, and they run it on a calculator, but basically what we need to know is your incomes, your outgoings, and whether you've got any dependents.
Is this what we know as the affordability?
Calculator, yeah, that's exactly what it is. So back in the day when me and you were getting mortgages, that was
It
probably
was
4 times your income.
wages,
And now it's done by a computer. So you can't say to somebody, oh, it'll be 4 times your income, because they all do it in a different way, and you put it in and it tells you what they
So
can
different
afford.
again, the added benefit there is having a broader spread of lenders gives you perhaps the opportunity to be able to get them a higher rate of borrowing.
Yeah, I mean, for example, we've had clients who have come to us, and with one lender they might have been able to borrow 90,000, and another lender with exactly the same information put in, they could borrow 123,000. So yeah, again, it's
a big difference.
It's a
isn't
big
it?
difference.
Yeah.
So yeah, if you go to one bank and you're only going to one bank, and that bank tells you 93,000, that's what you're going to be looking at. Whereas we can look at all the lenders because we have the software that does that, and then we can say, well, that lender might only give you 93,000, but that one would give you 123 or whatever it might be.
So if a first-time buyer or even somebody wanting to remortgage came to you, presented you with all the evidence of their incomings and outgoings, how quick would it be before they got a decision in terms of whether the lenders would look at them?
If I said 2 days, that's probably the worst it'd be. I mean, depending how busy we are, we may be able to do it there and then. If we've got a lot of appointments on, we definitely have them answered by the next day. So we can get it all done and agreed within sort of a day.
Yeah. So in reality then, it sounds like a relatively simple process, whether you want to swap your mortgage, whether you want to move, or whether you want to get your first mortgage.
Absolutely, literally, somebody can give us an hour at the time, so we can take their details and then leave it with us. Within a day, we can come back to them and say, right, these are the deals, and if you want to get it agreed, we can have it agreed within a day.
And of course, it's all confidential and.
Yeah, absolutely. Yeah. Obviously, you've got to sign the data protection to say you're happy for us to pass your information on to the lender. Anything you don't want us to deal with, we won't do anything with your information.
Okay, all sounds good to me. So I think that's it, Glenn, in terms of just a few that I wanted to ask. Reason I wanted to get these out there is I think it's beneficial for everybody to perhaps just take a look at the mortgages, and if you can save 20 quid a month, that adds up over your mortgage term, doesn't it?
Well, like you were saying the other day, with everything going up, if you can save £20 on your mortgage, I might only be paying for the £20 you're paying more for gas, but at least you're still at the same position, and it's free. It's not going to cost you anything. Half an hour of your time, and we can do the rest for you.
So all I can say is, if you want to discuss mortgages, we've got Glenn. Glenn kind of heads up the DDM Fine and Country Financial Services. Also works with Rachel as well. Give one of them a call. I'm sure they'll get you sorted, or at least point you in the right direction.
More than happy to help.
Thanks for that, Glenn.
No problem.
Okay.